Welcome to our video on creating a personalized investment policy statement for retirement planning. In this video, we'll explore the key components of an IPS, offering flexibility and adaptability to meet your unique retirement goals. Remember, this is a guideline, and consulting a financial advisor is always a good idea. In this video, we'll first discuss the importance of personal information and goals. Next, we'll delve into different investment strategies and asset allocations. We'll also examine tax management and contribution strategies. Then, we'll move on to rebalancing and monitoring. After that, we'll discuss risk management and contingency planning. Finally, we'll discuss the review process and adjustments before concluding the discussion. We'll begin by capturing essential personal data and retirement objectives. Information like age, risk tolerance, desired retirement age, and estimated income needs are crucial. For instance, if a couple plans to retire early at age 50, they need a solid saving strategy and risk assessment. However, these should be altered to fit your personal circumstances. You need to define your investment approach, whether it is passive or active. In our example, we demonstrate a passive, low-cost index fund strategy that focuses on total market diversification. For this, we've used a 7-5-2-0-5 allocation to U.S., ex-U.S., and bonds respectively, with defined rebalancing schedules. Your IPS should also recognize any speculative investments separate from retirement savings, and a minimum 25% retirement savings rate should be committed. It's also important to understand your comfort level with market fluctuations and assess the correct bond allocation needed to mitigate risk. Managing taxes involves handling tax implications across various accounts, like 401k, Roth IRA, and HSA. Consider your current marginal tax bracket to decide between Roth versus traditional contributions. In our example, the strategy involves maximizing employer matches and utilizing HSAs before moving on to other contributions. Understanding the long-term tax implications and advantages of different accounts is crucial in building an effective tax management strategy. Setting specific rebalancing parameters ensures your investments align with your strategic targets. Typically, an annual rebalance is suggested involving both tax-advantaged and taxable accounts. Set tolerance ranges for each asset class to maintain desired diversification while considering tax implications. It's important to decide if you prefer rebalancing your entire portfolio across accounts. What is a crucial initial factor to consider when creating an IPS? Is it A, choosing a brokerage firm, B, personal information and goals, C, buying individual stocks, or D, reading market news daily? You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is B, personal information and goals. Understanding your personal information and defining clear retirement goals are foundational to crafting an effective IPS. An IPS should specify your tolerance for market downturns and promote staying the course during volatile markets without panic selling. A long-term perspective is key here. The IPS also covers strategies for allocating investments across tax-advantaged accounts, which can be critical during contingencies. It's important to adapt your plan based on changes in circumstances, such as unexpected job losses or large healthcare costs. Define the frequency of IPS reviews and establish a process for making adjustments. In our example, an annual review is scheduled in April, and any major strategy changes require agreement from both parties. Regularly updating your IPS ensures it aligns with changes in personal circumstances or market conditions. Remember that this is just a sample IPS, and your specific circumstances may necessitate modifications. Always consult with a financial advisor for personalized guidance. Thanks for spending your time with us today. We hope you found this guide to creating a personalized investment policy statement helpful. Be sure to like this video, subscribe for more content like this, and let us know in the comments what you think or what topics you'd like to see next.